The AI revolution, riding high or heading for a crash. The tech world is buzzing with excitement over artificial intelligence. But is this enthusiasm justified or a recipe for disaster? New York has witnessed a remarkable surge in the stock market this year, thanks to the growing hype around AI. Since ChatGPT's launch in 2022 by OpenAI, investors have been captivated by the idea of a transformative AI boom. As a result, tech stocks have soared, and valuations have reached unprecedented heights, reminiscent of the dot-com bubble era. But here's where it gets controversial. Some analysts are waving red flags, warning that the market might be in a bubble. They argue that investors are bidding up stock prices to unsustainable levels, setting the stage for a potential significant downturn. This concern is reminiscent of the dot-com bubble burst in 2000, which had far-reaching consequences. Big tech giants like Meta, Microsoft, and Amazon have invested heavily in AI infrastructure, spending hundreds of billions of dollars. These companies' earnings have impressed Wall Street, but there's a growing worry about the sustainability of this trend. What if the market takes a sudden turn? Kristalina Georgieva, the IMF's managing director, highlights the global surge in equity prices driven by AI optimism. She warns that today's valuations are reminiscent of the internet boom 25 years ago, and a sharp correction could have a significant impact on world growth. And this is the part most people miss. Recent deals involving AI leaders like NVIDIA and OpenAI have raised eyebrows due to circular financing, suggesting a potential market propping. Goldman Sachs strategists note that while a bubble may not have formed yet, the high market concentration in AI calls for investor caution and diversification. Despite these concerns, AI-related stocks remain in high demand. OpenAI's recent deal with Advanced Micro Devices sent AMD's shares soaring. Investors argue that this time is different, as big tech companies are now profitable, unlike the unprofitable early-stage companies of the 1990s tech bubble. However, some experts suggest the market is in bubble-light territory, with valuations and flows indicating a potential bubble. But investor sentiment has not reached peak exuberance. This leaves room for the market to continue its upward trajectory. AI's influence on the S&P 500 is growing, with just 7 AI-related stocks accounting for over half of the index's gains since 2022. Individual investors and retirement savers are riding the wave, but they could be vulnerable to a prolonged downturn if a bubble bursts. The Bank of England has echoed these concerns, stating that equity market valuations, especially for AI-focused tech companies, appear stretched. This, combined with market concentration, could lead to a significant market correction if AI optimism fades. History provides a cautionary tale. Former Fed Chair Alan Greenspan's famous irrational exuberance warning in 1996 came 4 years before the dot-com bubble burst. Current Fed Chair Jerome Powell's recent comments about high stock valuations draw parallels to Greenspan's concerns. So, is the market heading for another crash? Or is this AI-driven rally sustainable? The debate continues, and the outcome remains uncertain. What do you think? Is the AI revolution a bubble waiting to burst or a new era of prosperity?